Do you know the financial terminologies that are crucial for your architecture registration exam? Financial literacy is not just a tool for business moguls, it's a valuable skill for architects too, especially those of you preparing for Division 1, Practice Management of the Architecture Registration Exam. Today, we're going to delve into 15 financial terminologies that are integral to your understanding of the architecture practice. We'll be demystifying terms like accounts payable, amounts receivable, assets, and so much more. You'll learn not only what these terms mean but also how they apply directly to the field of architecture. This knowledge will be instrumental in your exam preparation and will also provide a foundation for your future professional life as an architect. Understanding these financial terms is about more than just passing an exam. It's about equipping yourself with the knowledge to navigate the financial landscape of your career. Ready to demystify these financial terms? Let's dive in. First on our list are accounts payable and amounts receivable. Accounts payable represents the money that a firm owes to its suppliers. This could be for things like subconsultants like engineering services, printing costs, or any other business expenses. On the other hand, amounts receivable signifies the money that is owed to the firm by its clients. This could be in the form of unpaid invoices or agreed-upon services yet to be paid for. Now, how do these terms relate to cash flow in an architecture firm, you may ask? Well, they're like the arteries of your practice's financial health. When you have a clear understanding of your accounts payable, you know what's leaving your firm and when. And with a keen eye on your amounts receivable, you're aware of the money that should be coming in. So, these two concepts together give you a comprehensive picture of your firm's cash flow. Understanding these terms can help you manage the cash flowing in and out of your firm. Next, we have assets and chart of accounts. Assets are resources owned by a firm. This might include property, equipment, cash, or even intangible assets like patents and trademarks. These assets are the lifeblood of your firm, fueling its operations and growth. On the other hand, the chart of accounts is a little like a company's financial dictionary. It's a comprehensive list of all accounts used by a company in its operations. These accounts are organized in a way that reflects the company's structure and needs, making it easier to manage and understand the firm's financial health. So how do these terms connect? Well, the assets your firm owns will be represented in your chart of accounts. This allows for precise tracking and reporting, which is crucial for making informed business decisions. In essence, understanding your assets and how they fit into your chart of accounts gives you a clearer picture of your firm's financial position. Knowing these terms is key in assessing your firm's financial position. Now, let's talk about current assets, direct labor, and direct personnel expense. You see, current assets are those assets that can be converted into cash within a year. For most architecture practices, your accounts receivable is generally the firm's most significant current asset. On the other hand, direct labor refers to the cost of employees who work directly on a project. Think of the architects and designers sketching, modeling, and drafting. Now, when we combine the cost of direct labor with the expenses related to employing these workers, like their benefits and taxes, we get what's known as direct personnel expense. These three terms, current assets, direct labor, and direct personnel expense, play a significant role in project costing and budgeting within an architecture firm. Understanding them can help you accurately estimate project costs and manage your budget effectively. These terms are vital in costing and budgeting your projects. On to discretionary distribution, fixed assets, and gross revenue. Let's start with discretionary distribution. This term refers to optional payments made to owners or employees, often seen as a bonus or reward when the firm is performing well. It's discretionary because it's not a fixed or regular payment. It's made at the discretion of the firm's leaders. Next, we have fixed assets. These are long-term tangible assets that a firm uses in its operations to generate income. Think of things like buildings, equipment, or land. They're fixed because they're not expected to be converted into cash within a year. Lastly, let's talk about gross revenue. This is the total income a firm earns from its operations before any deductions like taxes or operating expenses are subtracted. It's the raw income, the top line on a firm's income statement. So, discretionary distribution, fixed assets, and gross revenue. Each of these terms gives you a different perspective on a firm's profitability and financial stability. These terms give you a snapshot of your firm's profitability and stability. Let's move on to indirect labor, liabilities, and net operating revenue. Indirect labor refers to the cost of employees who do not work directly on a project. Think of it as the cost of tasks that support the project, but don't contribute directly to its completion, like administrative or maintenance staff. Next, we have liabilities. Simply put, liabilities are what your firm owes. This could be in the form of loans, accounts payable, or wages due to employees. It's essential to keep track of liabilities as they significantly impact your firm's financial health. Finally, we have net operating revenue. This is your income after all deductions have been made, including operating expenses, cost of goods sold, and taxes. It's a clear indicator of your firm's profitability, showing you the actual income generated from your operations. Understanding these terms, indirect labor, liabilities, and net operating revenue, is crucial as they help you comprehend your firm's profitability and liabilities. Lastly, we have other assets and overhead. Let's dive right in. Other assets, as the name suggests, are those assets that don't fit neatly into the main asset categories. These might include things like long-term investments or perhaps patents and trademarks that an architectural firm might own. They may not be the primary assets that come to mind when we think of an architecture firm, but they certainly play a significant role in the firm's financial health. Now let's talk about overhead. This term refers to the ongoing business expenses that aren't directly tied to a specific project. Things like rent, utilities, office supplies, or the salaries of non-project personnel. These costs are ever present, regardless of whether the firm has a project on hand or not. Understanding other assets and overhead gives us a more holistic view of a firm's finances. It helps in determining the firm's profitability and sustainability. These terms are essential for comprehensive financial management. And there you have it, 15 financial terminologies relevant for your architecture registration exam. Let's do a quick recap. Accounts payable, the money you owe to suppliers or vendors, and amounts receivable, the money owed to you by clients. Both are crucial in managing your firm's cash flow. Next up, assets. These are resources owned by the firm that have economic value. The chart of accounts is a list of all accounts used by a firm, serving as the backbone of your accounting system. Current assets are assets that can be converted to cash within a year, like cash and accounts receivable. Direct labor refers to the wages paid to employees who work directly on a project, while direct personnel expense includes not just wages but also benefits and taxes related to those employees. Discretionary distribution is a portion of income given to owners or partners that's above their regular compensation. Fixed assets like buildings and equipment are long-term assets that can't be easily converted to cash. Gross revenue, the total income generated by a firm before any deductions. Indirect labor costs are the wages paid to employees who support the direct labor employees like administrative staff, liabilities, the financial obligations of a firm, and net operating revenue or net revenue is your gross revenue minus direct costs related to producing your service. Other assets are assets not classified as current or fixed, like patents or copyrights. And finally, overhead, the ongoing business expenses not directly tied to creating a product or service. Understanding these terms is not just about passing an exam, it's about mastering the language of business in the field of architecture. It's about being able to make informed decisions that will drive your firm's financial success. Master these terms, and you're one step closer to acing your architecture registration exam and running a successful architecture practice. Good luck!